Hello, today we're going to talk about the oil markets, and we're seeing that Brent crude futures still held below $76 per barrel on Wednesday after losing nearly 1% in the previous session, weighed down by demand concerns in top crude importer China as the CNPC, the country's largest oil and gas producer, cut its 2023 China crude demand estimate. Data also showed that China's energy imports slightly fell in May, while the country's crude oil stockpiles rose to a 2 year high last month. Moreover, investors also are concerned about a potential surge of Iranian crude exports amid reports that the US was holding indirect bilateral talks with Iran regarding the curtailing of Tehran's nuclear program. Meanwhile, voluntary output cuts implemented by the OPEC Plus and additional cuts by Saudi Arabia in July kept a floor under oil prices for the time being. Investors were also hopeful that interest rate cuts in China and the pause in the US Federal Reserve's tightening campaign would bolster the outlook for the global economy and energy demand. But if we're talking about the Fed, as we have already discussed, we are seeing that the Fed is very likely to hike interest rates, and this will be an additional damper for economic growth if this should really happen. So that's why markets currently are not too excited of how and where the commodity space is developing into, and we have to be careful for the time being that if we have a Fed that will still hike interest rates, the growth outlook, of course, is going to be changing dramatically. And we're going to see that this is going to have an effect on nearly all asset classes. So be prepared and pay close attention to the headlines. We're seeing constant new developments, and you have to be careful at this point. If you would like to receive further updates on the financial markets and what's happening there, please like and subscribe. Thank you.